Hello and welcome. This is BQ Prime. I am Agam Vakil and you're watching the FNO show, a show in which we take you through all that is happening in the derivative space in Indian equity markets. At the moment, we are seeing some weakness as far as benchmarks are concerned. In fact, we're starting to see, that weakness has come about suddenly. So for now, about 0.5% cut for the Nifty. There is also been a little bit of spike as far as the India Volatility Index is concerned. That's up around 0.5%, still 11.4. And as far as the Bank Nifty goes, we're looking at sharper cuts of down around 0.6 tenths. And let's not forget, it is also the Fin Nifty expiry today, and that in fact is the weakest of them all. That's down around 0.8 of a percentage point. So there is substantial weakness. The Fin Nifty is in fact struggling to stay at, struggling to in fact recover from day's lows. At the moment, just at around 19,500. So we continue to keep an eye on that one, considering it is the weekly options expiry in today's day of trade. Let's very quickly take a look at where we are seeing a lot more concentration as far as your options are concerned. So to talk about the Nifty, we have max. This is the 16th November options, and we are looking at max OI at around the 19,500 call, as well as the 19,400 put. Does that mean it's a 100-point range? No, not necessarily. I'm sure the range is a lot broader than this for now, but at least as far as your activity is concerned, this is where we are seeing most amount of addition in open interest in today's day of trade. As far as the Bank Nifty goes, once again, on the higher end, we are looking at 44,000 as the one with max OI, the 44,000 call specifically, but a lot more activity and a lot more addition in today's day of trade, where is at around 43,800 calls as well as puts. And this, of course, is the 15th November expiry. That is day after. So we continue to keep an eye on some of these cues. We really haven't seen too much otherwise. Of course, a lot of stocks are moving on account of earnings, as well as several other factors which are playing out in the markets. On that note, let's get in an expert to see what they have to say and how they are reading these cues. We have Akshay Bhagwat. He's a senior vice president for derivatives research at GM Financial. Akshay, good morning, and thank you so much for joining in. Let's start with your view on the benchmark. How are you assessing it, and how would you play it?
Good morning, Agam, and wish you a happy Diwali. And to all the viewers, may your portfolios be bright and sparkle as the lights of Diwali. To start off with the first question on how the Nifty would trade for the short term. Well, if you look at the start to the Nifty, we have started on a slow note, a bit of a selling pressure as I see. 19,500 mark is too tough to cross or sustain for intraday trades in the morning session. The reason being, we have a lot of call writing bets placed at the 19,500 strike. Now, for the 16th November expiry, considering the heavy writing base at the 19,500 level, and also considering the fact that I'm seeing some fatigue signs in the Nifty index at the current level, there is a good chance that being a truncated week, we can see a bit of a negativity going into the day and probably into the weekly expiry of this Thursday for the Nifty index. The levels which I see is first is the important level of 19,380 to 19,400. So that's an important support zone, considering the fact that a lot of put writing bets are placed at 19,400. In case these levels were to breach, then the level of 19,300 would come into play. So a slightly negative view on the market. If you have a trading perspective for this coming weekly expiry, this view would continue till we trade below the 19,525 mark.
All right, fair enough. A slightly negative bearing, but is your view on the Bank Nifty similar? What's your take here?
Actually, if you from a technical setup, the Bank Nifty looks more bearish than the Nifty index. Now, one of the reasons being that last month we saw a very negative development in bearish Nifty. That's a double top. And the recent dead cat bounce or the relief recovery rally, as you may call it, has seen a retest of the breakdown levels which we noted a few trading sessions back. So the levels of 43,800 is a very massive resistance for Bank Nifty, especially these levels would hold vital importance to you if you are a short-term trader in the market. So I would wait for the Bank Nifty to settle above 44,000. So that's the first level of comfort which I derive for adding on to any long bets. At the current juncture where it is poised, it is more prone to some long unwinding, or you can say some bit of profit booking, if you may call it, where Bank Nifty might test the lower ends of 43,300 to 43,200 on the downside for the next 4 to 5 trading sessions. So again, Wednesday is the weekly expiry of the bank index, and ahead of that, you may see some negativity going into the Bank Nifty weekly expiry for the Wednesday's trading session.
All right. Finally, Akshay, if you could also take us through your calls for the day in terms of stocks.
Yeah. So a couple of stocks which I have recommended from the futures and options segment. Now, firstly, to look at the way the power sector is reacting since the last few trading sessions, especially the November series. And in fact, even today, a lot of power stocks have started on a long build-up note and strong additions in the futures and options segment in the derivative space. So my first recommendation is NTPC here. NTPC has a very strong technical setup and a positive breakout, which I did note in the early hours of trade. So my sense is that it's a very good stock to buy from a short-term trading perspective for the November series. You can buy NTPC November futures at the current rate with a target price of around 264, an extended target of 269. Keep a stop of 242 on this trade. The second trade I would recommend here is an NMDC. Now, again, metals and sector has seen a strong opening today, and most of the metal stocks have rallied in the opening trades. Here, NMDC is one stock which has an excellent technical setup, participation in deep OTM calls in the option segment. So that makes me believe that NMDC has much higher way to go. Here, I would recommend an option trade where you buy a November 180 call with it's available around 4 to 3 rupees premium right now. Keep a target of around 7 to 8 for the November series with a stop loss of 1. And the last trade recommendation from the pharma space here, it's Ipca Labs. Again, a chart set up very strong, which we have seen most of the healthcare, the counters performing exceptionally well in last week, and Ipca Lab 2 is no exception here. I believe 1060 plus is where the stock is headed for the November series. Buy the futures at the current rate, a target of 1097 with a stop of 1018.
All right, Akshay. Well, thank you so much for those picks. We leave it at that. Once again, wishing you as well a happy Diwali and a prosperous New Year. On that note, Akshay, we'd like to thank you for taking us through your views on the markets. And with that, it's also a wrap on this segment. But don't go anywhere. Lost my lineup. Stay tuned to BQ Prime.